Welcome to the Monks Academy, an educational channel where we explore the realm of decentralized finance so you can take charge of your financial future. A project powered by the old monks for the old finance community. Cool. All right, guys, welcome to another episode of Monks Academy. I'm really excited for this one. Really grateful to have Hyperconnect from the Karma Finance team joining us today to talk all about Karma Finance, what it is, talking about Karma Bond, the future plans, a really exciting product that could be game changing for the DeFi protocols existing in Icon at the moment. So, Hyperconnect, really glad to have you. Thanks for joining in.
Thanks for hosting, Ash.
Pleasure's mine. So, just to start off, Hyperconnect, how do you get involved in Karma Finance? Always very inquisitive to find out people joining the crypto industry.
Yeah, so I got into the sort of crypto space in 2017 and sort of remained mainly on the sidelines and as a sort of an investor in various projects. And then towards 2020 was my interest was sort of focused towards interoperability, and that's how I got to know Icon. And then sort of reached out within the community and talking to P reps and came across the Protocol 7 team, and we started talking and discussing different avenues and protocols that could be developed on Icon that were currently missing compared to other chains. And so yeah, Karma Finance is one of those projects, and have been working with Protocol 7 since late last year.
Interesting. I mean, so in terms of just going a bit off topic, I'm really, when people join the crypto industry, I really want to like kind of go a bit more in depth, kind of like advising, trying to get some advice for the people looking to join the industry. Like, what kind of advice would you have, complete amateurs, greenhorns to the industry, really inquisitive, really want to get into the industry? Like, what would you recommend, like, in terms of getting their first step into the industry?
Yeah, I'd certainly say curiosity is one of the traits that you definitely need to have. I think patience as well. So just spending time reading about the different protocols you're interested, or the different blockchains you're looking into. I think a lot of people are obviously attracted by the financial reward, and when you're in a bull market, things are quite exciting and frothy, and people may get overwhelmed and just buy whichever coin is going up many percentages on that day. But I think if you're really interested in the actual technology and the freedom that this technology could also create, as well as censorship resistance, decentralization, and essentially avoiding any kind of sort of centralized control over people's money and how people interact with that money and share it and send it and receive it. I think that's the biggest. That's the thing that attracted me the most within this space, and understanding how we can essentially move from the traditional finance space to the decentralized finance space. And I know for new investors or people who are just getting into the space, it can be overwhelming. But the reason it's overwhelming is because DeFi really brings to the surface what the traditional finance world have had at their fingertips all this time. It really shows that now that all these financial models and the ecosystem in itself are now exposed through DeFi, so it can be quite overwhelming for people to understand, what is a liquidity provider, what's a decentralized exchange, what all these sorts of things that you just need to get a bit accustomed to. But definitely, I'd say, reading documentation, understanding the concepts, watching videos, talking to people, talking to developers, dabbling in some, let's say, even some coding, do some tutorials, look at the development, the documentation around the dev tools that you have. Have a play around with it. There are some really interesting tutorials you can do around understanding, for example, Solidity and how developers have built the biggest ecosystem on Ethereum so far, and there are so many examples of areas where you can just read and learn and pick things up. And then once you do learn those sort of the underpinnings of the technology and the smart contracts aspect, you get to really understand why this is so exciting, sort of at the forefront of decentralized finance. So that's a long-winded answer, but it's a curiosity, definitely.
No, I mean, thank you for that. That's a great answer. I mean, like, there's no, like, as you correctly said, there's no right way of going about it. It's at the end of the day being inquisitive and being persistent and finding a passion, really, because like once you get into DeFi, like it sounds like a new concept, but fundamentally a lot of the concepts are coming from corporate finance. If you really think about it, it's just corporate finance in a decentralized environment, which is pretty much DeFi. I mean, at the end of the day, it's not rocket science. So I mean, it sounds quite complex, but then corporate finance as a subject is quite complex. So people in the space, they're moving at a fast pace. New entrants are coming at rapid pace. So I'm really excited to be in the space and really glad to be in Icon and seeing the products like you guys pushing out, we develop. So thanks for that answer. Just moving into kind of Karma Finance. I understand you guys rebranded as well from Karma DAO to Karma Finance. Can you just talk a bit about Karma Finance or Karma Bond specifically?
Yeah, absolutely. So yeah, I'm going to definitely try and keep the financial language as simple as possible, because that's, I think, one thing we do in the crypto space is we're terrible at naming things, and it's just really difficult for people to really get a grasp of what some of these things are. But essentially, so Karma Finance is a decentralized financial ecosystem we're building with Protocol 7, one of Icon's public representatives. And this is a project that will have several services under it within the ecosystem. And the first service we're building is the Karma Bond service. And Karma Bond service was proposed for funding through the contribution proposal system, or CPS as it's called on Icon. And so we're very grateful to have access to some of these funds to develop the first element of Karma Finance, which is Karma Bond. So Karma Bond is actually inspired from a protocol called Olympus Pro. So Olympus has two elements to it: the Olympus DAO and Olympus Pro. And Olympus Pro is a bonding service. So we're taking those concepts and bringing those to Icon. And so what Karma Bond is trying to do is to develop a way that protocols on the native Icon blockchain can acquire their own liquidity. And this is what's called protocol-owned liquidity. And the concept behind this is that most protocols within the decentralized finance space have to essentially rent out liquidity. Now, the reason they need to do this is to attract investors to deposit liquidity into various pools so that tokens can trade. So you have essentially a healthy balance of two different tokens, for example. And if you want your native token for the protocol to be able to be traded in enough quantity and enough liquidity, you need to incentivize people to deposit their liquidity. Like, what's the incentive for me to deposit some dollars and some tokens such as OMM, for example? Why would I want to do that? I understand that I want to deposit these tokens so that other people can trade them, but I need to be rewarded. So the only way I get rewarded is through the reward scheme with the governance token, in this case OMM. So I deposit a share of OMM and a share of dollars, and within that I get a specific yield, an APY, paid out in OMM, and that's my reward for providing liquidity. Now the problem, it's not really a problem, but the issue that protocols have is that they continuously give out their native protocol tokens to these liquidity providers. And liquidity providers are essentially traders. What they're doing is they're opening up a position and saying, I believe that over a certain period of time, if I put in some OMM and some dollars, and over time, the value of OMM against the dollar stays stable, I will have essentially put in my capital, collected the reward in OMM tokens, and then I can pull out my capital and I've made a certain gain. What happens is tokens are very volatile, as we know, and as we can see in the crypto space. Just generally, cryptocurrencies in general are very volatile. So what happens is that liquidity providers are also, prone to this volatility and can withdraw their capital very quickly, and that hurts the protocol. It hurts the liquidity in those pools, and the protocol is essentially paid out all of these governance tokens to a provider, and then they go away and they leave that protocol with those tokens, and what they do is generally they sell that token, recover some dollars, and move on to the next protocol that offers the highest APY, right? So what Karma Bond is going to try and do is allow people who believe in the protocol and who like the protocols they're investing in to essentially exchange certain amount of tokens for the governance token. And that's a single trade, and it's done. And that way the protocol in question, so Ohm Finance, can collect the LP tokens in exchange, the liquidity pool token. And so what happens is you're trying to align the incentives of the users and the believers of the protocol with the protocol itself. The protocol becomes de facto the largest liquidity provider, reaping most of the benefits and the fees, and keeping the price of the token much more stable. Higher liquidity means you can make bigger trades with low slippage, and it's generally healthy for the price action, and it's also good for token holders because they know that the biggest holder of that token is not someone who's just going to sell their token when the price is right for them. It's actually the protocol that holds the most tokens, and the protocol would never sell their tokens in such a way, since it is a DAO. It's a decentralized autonomous organization which follows the voting process of a DAO, and the voters are the token holders. So it's all sort of a self-fulfilling, positive reinforcement cycle that we believe Karma Bond will bring to protocols such as Ohm Finance. We're very excited to be within the icon space, since there is still a lot of building to do. There's still a lot of things we can develop for icon, and I believe that Icon is really in its infancy when it comes to DeFi. There is so much to do and so much to develop that it's an exciting space to be in right now.
Interesting. So just to get it from the perspective of from the user and from the protocol, I guess you have two different types of customers. So from the customer's perspective, you, for example, if I was to interact with the Karma bond service, I would essentially need to take my LP tokens and deposit it into to Karma, and then in return, I will be basically getting Karma tokens. Sorry, I'll be getting the protocol tokens at a discount, which is vested for a couple of days, a few days, and then from the protocol side, they'll be receiving the LP tokens, right? The safe for home finance. Is that in summary of how the dynamics work?
Yeah, that's correct. So if we want to get technical in terms of the journey of a user, so let's say you're currently a liquidity provider on Own Finance. So you're in one of the three pools. So you're supplying OMM and USDC, or OMM and USDS, or even OMM and SICX. So you're a person who's supplying liquidity to recover some yield. Currently, it's between 70 and 90%, I believe, right now, which is a decent yield for a liquidity provider. But you're obviously subject to impermanent loss in this. You're an active trader with an active position, so you need to manage your risk. What you can do is take your LP token. So it's a token that represents a share of the liquidity pool. And you take that, so you connect your wallet to Karma Bond. In the wallet, you will be able to see your LP tokens. It will tell you, I have, 2.3 LP tokens of OMM IUSDC. That's my token. And I can then click Bond. And then I will see on the interface, it will say, I provide one LP token and I get in exchange a certain amount of OMM tokens. And it will tell you the market discount. So the way this works to incentivize people to send their LP tokens in exchange for OMM, you will get a discount, a market discount. These market discounts are built and designed by the protocol itself. So OMM or Ohm Finance will design these discounts. Generally, it's about a 10% market discount. And then these prices fluctuate based on the demand of the bond. And so, the user would then, in exchange, get OMM tokens at a market discount. They don't get them straight away, though. So to avoid any arbitrage and any market manipulation, these tokens are vested over a period of 5 to 7 days. And so they would get the full amount of tokens after 7 days. Or they can claim a portion of the payout every day. Once per day, they can claim 1/5 or 1/7 of the payout. So it's called linearly vested over time. So that's the crux of it. That's the process. So pretty simple. You connect your wallet or your ledger device to Karma Bond. You will see your available LP tokens if you have them. If you don't have them, there's going to be a link to say, go purchase LP tokens on Own Finance, and they can do that. And then when they come back, they will see the LP tokens, switch and bond, and then you get OMM tokens in exchange for a discount.
So it has to be LP tokens. I can't deposit, say, Ohm tokens directly, or similar OMM and SICX. It has to be LP tokens, is it?
So there are several options. So the main option will be an LP token. This is to increase protocol owned liquidity. So Own Finance will start collecting all of these LP tokens and start becoming a big LP token holder. But there will also be one-way bonds as well. So we can develop and design bonds that are, say, hey, Ohm Finance, the protocol, wants to diversify its treasury, and this is treasury diversification. They can say, actually, can you send us SICX and we'll give you Ohm in exchange at a discount as well. And that means you can then start using Karma Bond as a diversification method. So let's say maybe you also want in your treasury you want a percentage of BNUSD. So you can say, hey, I will give you OMM token for BNUSD in exchange. I'll give you a discount. And that's going to build up our treasury in BNUSD as well. So there's all sorts of mechanisms and ways you can use the Karma Bond service. And I think that's the conversation Ohm Finance will have to have with Ohm token holders through the governance process to say, okay, we want to start doing protocol and liquidity, and then maybe as a second bond in the future, we want to also diversify our treasury so we can create unilateral bonds. And then who knows, all the loads of different ways you can use the service to benefit the protocol.
Uh, yeah, I mean, it's really powerful. Come to think of it, what Karma Finance, Karma Bond can offer the protocol and the users. So just to write home the fact that the advantages of what you mentioned, just a summary. So from the protocol side, the advantages are obviously they obviously get to own they get to own their liquidity, and also it's a less, rather than them just giving out their tokens, their governance tokens free through liquidity mining. Now they can actually sell it, trade it, so to speak. So that's one advantage. The other advantage is obviously that treasury gets diversified. They own the LP tokens, so they can always, trade it. And there's always a demand for it. And then from the user's perspective, obviously they get to put the governance tokens at a discount. What else? They obviously don't have the cumbersome or the issue of impermanent loss, because they're not directly involved in the liquidity pool. So have I captured the main advantages for both sides, or is there more to add from that perspective?
Yeah, no, that's a really good job, actually. You've summarized that pretty well. So just to reiterate, so the benefits for the user, there are three main benefits. So the first one is an opportunity to buy a discounted DeFi governance token, such as OMM. That's the first thing. If you really like OMM or whatever token you support, part of the protocol, you get that at a discount. It's offered at a discount. Second is if you're looking to avoid impermanent loss as an LP provider, that's the big advantage is no more impermanent loss. And then the third and final benefit for the user is that you will have more and more confidence in the liquidity pools, because you know that there's going to be more and more liquidity residing with the protocol and not with individual LP providers. So stability in the pool will be super important for trading. Those are the three benefits for the user, and then you have benefits for the protocol. So the protocol would slowly but surely start owning their liquidity. As their bond selling progresses, they would get more and more of the liquidity tokens, LP tokens, sorry. The protocol will then be able to support much larger trades. So if someone wants to sell, I don't know, or buy 100,000 OMM tokens, they could do so with little slippage, for example, since the protocol would be leaving the majority of their LP in the liquidity pools. You also, as a protocol, capture most of the fees in the trading pool. So the OMM IUSDC pool, for example, since OMM, they would get the majority of the fees, again, being a productive asset for the protocol. And then finally, the protocol will get more and more exposure through the Karma Bond marketplace. As the Karma Bond marketplace grows, it will attract users, and these users can then be introduced to your protocol if they're not familiar with OMM, for example, own finance, and the marketplace becomes very popular, it's kind of like a advertising platform as well for the protocol. So yeah,
Interesting. I
that's
mean,
it.
yeah, I mean, powerful advantages. I think it'll give a lot of synergies for all the protocols that you guys will engage with. Uh, I just want to move into a point that you made in one of your earlier answers, where you mentioned that the community would kind of have to decide, the parameters, how they're gonna the parameters in which they will work with Karma Finance. So I just want to talk about, so for example, say Home Finance, I would assume that there would be some kind of governance proposal that would go in before Karma Finance, goes live with the Home and the Home tokens. Uh, what kind can you talk a bit about what kind of parameters that the committee would have to decide on?
Yeah, sure. So it'd be relatively simple actually for the community to understand. So essentially, it'll be a vote on is it two, maybe three parameters. The first parameter is how much discount should the protocol offer OMM for? So are we going to offer it at a 5% discount, a 10% discount? And also, what's the minimum price if ever the market price goes down? What's the minimum price the protocol is willing to sell OMM as well? So you have that. So it's kind of a protection mechanism and an incentive mechanism. You would need to decide and vote on the bonding, the vesting period. How long does a user receive the totality of the discounted OMM? Do you want it in 3 days, 5 days, 7 days? Um, and then finally, and this is probably the biggest question, is how big is going to be your bonding program? So I don't know, for example, how much does Ohm Finance have in the DAO fund? But let's say, just for argument's sake, let's say it has 100,000 OMM. And you can say how much percentage do we want to put available for the bonding program? And that may say, oh, let's start small and put in just 10% of the DAO fund for bonding. And then, okay, this was a really big success. Let's put in another 10 more percent. And you can keep adding to the bond program. And there's another final parameter is how what's the biggest bond a single user can apply for. So you can say the maximum bond payout out of the bond program is, let's say, 1% or 0.1%. No user can bond more than that for a single bond. They can do several bonds. They can make lots and lots of bonds if they want, but they won't be able to make one single huge bond that would just like consume the whole bond program. So you can build those in. And that's about it, actually. Those are the parameters you need to decide. Obviously, the Karma finance team would advise on what we think the parameters should be, and we can give you several options, and then you can take those options to the vote. The reason we can advise is because we've done some analytics on all of the bond programs currently available on Olympus Pro, and we've evaluated all of them, and we've got all the percentages that each protocol decided to go with. We have all those numbers, so we will be able to share those numbers with everyone and say, like, on average, here's what the first bond program looked for these 40 different protocols. And all the protocols are all very different. Some are DeFi, some are money market, some are AMM, some are, all sorts of different DeFi protocols. So it's a good representation of the marketplace, I think. So you'll have some historical data as well to make your decision, which I think is quite powerful.
Interesting. Yeah, I mean, I'm sure you guys will advise us as community members of home, exactly, uh, you know, how exactly the advice and what kind of standard procedures that other protocols have kind of, in other ecosystems have kind of adopted. So looking forward to that. I just want to also kind of want to basically talk to you on the aspect of uh, for you users such as me or anyone in the DeFi space. When a new protocol comes on board, they're all excited. We want to know, okay, how we can take advantage of the new governance token that comes out. Just take advantage of early price action. Can you just talk about the like how what is the governance token for Karma Finance? I've seen on the website, a couple of options, whereas bkarma and karma. Can you just talk a bit about the governance aspect of Karma Finance?
Yeah, absolutely. So in addition to the incentives for the user that we've talked about, there will also be one additional incentive, which is that they will also receive a token called bkarma, B for bond, so bkarma. And this token is essentially a whitelisting token. So for all the early users of the Karma Bond service, we will have this bkarma token distribution activated. And this will give all the early users the right to then purchase the Karma token at a floor price of 1 USD. The floor price of 1 USD is because the Karma treasury will be fully backed one for one. One Karma token equals at a minimum 1 USD. We will actually most likely have more than 1 USD back to be on the safe side. So the way Karma treasury works is, for example, through the Karma bond service, we take a small fee for the bonding service. And so our treasury will be backed in stablecoins and a amount of governance tokens from the protocols on the marketplace. So our treasury is going to be diversified and at a minimum backed with one-for-one stablecoin. So the bkarma will be a sort of whitelisting token. Karma will be the actual token, the governance token. bkarma will be able to be exchanged for Karma when the time comes, when we launch the rest of the Karma Finance ecosystem. That's in summary the process.
Interesting. So basically, bkarma will be essentially only minted based on the fees, right? If I'm correct.
That's correct. So let's say a user bonds OMM/IUSDC LP token. So it bonds and receives OMM. And Karma Finance, currently the standard fee is 3.3% of the payout in OMM. So 3.3% is taken and sent to the Karma Treasury, and the remaining 96.7% is sent to the user. The amount of fees that Karma Bond captures is then converted into dollars, as in like with a price oracle. And let's say the user created $100 worth of fees for Karma Finance or Karma Bond. They would get 100 bkarma essentially.
Okay. So when you mean by early users, is there like is there a definition of an early user, or so it's going to be bkarma is going to be for early contributors and early users, right?
That's right. So 90% of the bkarma minted will go to the user and 10% will go to the early contributors. And this bkarma token will not be live forever. There will be a time where we stop the early user program, the early adopter program. Karma will then be able to be purchased at market price later on. So Karma token will be traded on DEX. bkarma will not be traded. It'll just have a minting function, exchange bkarma for Karma with $1 backing.
So I guess it's really, there's a lot of advantages of community members, users getting in early because obviously, as you said, bkarma is not going to be there forever. Cool.
Yeah, exactly. It's a bit like when you first launch a protocol, you send most of the inflation, for example, for the early users. And then after month one or month two, you slowly decline that inflation. So for Karma, it's quite similar, but instead of it being inflation, it's more about how many fees Karma Finance is able to collect, and then from that, the users are able to essentially collect that token. So we still don't know for what the metric will be to turn off the bkarma emission, but it will be something in combination of time plus total treasury captured. So once we hit our sort of minimum threshold of sustainable treasury, we will most likely stop the bkarma emission, and then only move to the market side of things. So obviously the Karma Bond service will continue to grow and thrive, and users will be able to collect the discounted protocol tokens as standard, but just the bkarma element will stop at some point.
I mean, it's really interesting dynamic because obviously other protocols, don't really have, apart from obviously LP tokens. I mean, two kind of types of actively managed tokens. So essentially, when bkarma, I guess, is it correct to say that, for example, from the karma token, since bkarma is already there, it'll take some of the inflation out of karma, like in terms of tokenomics, that would be advantage to holding karma in the future as well, right? Because I guess the early contributors are getting remuneration from bkarma. So I guess that inflation that would have gone, I guess, for another protocol to go to fund early contributors, I guess some of that pressure goes to bkarma, which is funded by essentially fees. Is that a correct assumption? Is that the correct way of looking at it?
Yeah, so essentially, bkarma is fully generated from the fee. So there's no actual inflation from bkarma. Basically, there is no inflation at all. So bkarma is only minted for $1 worth of fees, and those fees are kept safe in the treasury. And so and then you also have to, once you want to convert your bkarma to karma, you have to also spend $1 to do that conversion. So that means the treasury will be backed by $1 plus however much the value of the protocol tokens is in the treasury. And you will always be able to redeem your karma for $1. You will always be able to recover your initial investment for the exact same price you paid at a minimum. That's going to be so karma is going to be a governance token as well as a reserve currency. And the word reserve means you can always go back into the reserve and say, hey, I have 100 karma tokens, give me $100, please. And that's the commitment from the DAO, is that you will always be able to redeem it. However, karma token can trade higher than the backing value, because karma will also have some utility to it. And this is quite exciting in the way we're going to be developing the karma tokenomics, is that it's going to be a multi-utility token. So it collects the utility of whatever's in the treasury. It'll be a governance token, so you'll be able to vote on where the Karma Finance treasury is invested. And there's going to be a V curve type lockup for the Karma token, which is something similar to what's happening on OMM and Balanced as well. So copying essentially the V curve model. And the longer you lock up your Karma, the bigger percentage you will collect of the karma inflation, because there will be an inflation for karma, but actually very small. It'll be a low inflation tokenomic model. And there's going to be a karma staking reward. Karma staking will essentially collect and capture the the proceeds of how Karma Finance invests its treasury. So Karma Finance will be an actively managed treasury, a bit like an investment fund, and the Karma token holders will vote on how this treasury is invested. And this will be really exciting, essentially, as a community-managed investment fund with a portfolio allocation of, I don't know, this could be depending, but it could be like, okay, we're going to keep as a minimum a certain amount of stable coins, and then maybe we want to put those stable coins to work to earn yield on own finance, for example. We will have a certain amount of own tokens. What do we want to do with that? We can stake them for some reward. We can provide more LP tokens, for example. We could use the governance function and start voting for specific PREPs to collect more rewards. For example, I don't know, you can vote for a gangster bet through Karma Finance and get some GG tokens. All sorts of really interesting strategies, but fully managed and voted by the Karma token holders.
Yeah, I think there's a lot of options in terms of, for users, I guess, to maximize how they want to receive rewards, and how Karma Finance as can kind of deploy the assets to kind of uh, reap more returns. So I think there's a lot of ways that I guess an active user can be really involved with Karma Finance. I'm really really excited to. I'm not saying that because you're on the show today, but it's a really different dynamic than the other protocols like even Home Finance and have. So it's really exciting times.
Yeah, I definitely think so.
Just
Yeah, it's going to
sorry.
be a DeFi protocol that's very, very different dynamics to your classic sort of money market and AMM. Um, but it will certainly, it will work in synergy with them all.
Yeah.
And the strategies that we build will obviously utilize all of the DeFi protocols on Icon. And then if you can imagine with BTP and the connection there, you can imagine that Karma Finance then becomes even more powerful with additional protocols joining the bonding program, for example, across chain. So lots of excitement there as well.
I just want to pick up on a key phrase or key point that you made in your previous answer, where you mentioned reserve currency. Now that term in the crypto industry, has met with certain negativity and criticism through Olympus Pro and Wonderland and things like that. What lessons have you guys, if any, have you been following what's been going on? Or what are lessons that you guys have learned through that whole process?
Yeah, that's a really good question, and I think it's really important to be as transparent as possible on this topic. So when we first looked at this whole bonding concept, we obviously looked at how Olympus DAO was doing it, and Wonderland, and there's like climate finance and all sorts of these what they call rebase tokenomics, with crazy APYs with the 3-3 model. So when we looked at this, it was interesting, but it's definitely not what got us excited. What we were so excited about was the protocol and liquidity aspect. So exclusively Olympus Pro function, and only that function. And then Karma Finance, there were some initial thoughts, okay, do we want to go down this Wonderland route or the Olympus DAO route? And obviously we've learned a lot from the market and understood and read through the community forums and seeing all the dramas happening across these different rebase tokenomic protocols. And we've decided that, obviously that's not something we would like to do. And we don't think that's something that the Icon community as well is really going to be enjoying. I think the way we envisage Karma Finance is more of sort of a long-term and investment strategy type protocol. So becoming the owners of a fund, of a treasury, and investing that treasury on behalf of everyone else as a voter. So that's what we really want to do. We also, the tokenomics of Karma will be extremely exciting because we will have that multi-utility aspect, the reserve currency as well. So the backing at a minimum of one stablecoin, one USD stablecoin. But we're also going to have some interesting services we're keen to develop and build on top of Karma Bond service. So there's going to be a Karma Invest service, which is going to be this whole investment aspect of Karma. If you stake Karma, you're able to vote on the investment strategy for the treasury, and then you would collect the rewards from the investment proceeds. So that's one thing. We have the V-curve lockup tokenomic model as well, which we think is going to increase the long-term lockup of Karma. And then finally, we also have a Karma Save service, which we want to implement, which is going to be a very similar type of model to Anchor protocol on Terra. And this will be using a burn and mint function. So you would burn Karma tokens in exchange for Karma dollar, and Karma dollar would capture a certain percentage of the investment proceeds in APY and convert it into dollar. So you would get Karma dollars. Let's say you mint 100 Karma dollars, and you would have to burn a certain amount of Karma at market price. You then take your Karma dollar, put it into Karma Save, and then Karma Save will tell you this is the current APY of Karma Save. So yeah, it's quite exciting, and we have quite a few ideas and ways we can build this, and we're currently designing that in the background. But these are sort of, this is a bit of alpha I'm sharing now, but it's kind of the different services we're going to be building under the Karma Finance umbrella. But right now we're fully focused on developing Karma Bond as a first step, and then we'll hopefully build the other services following that.
Yeah, it's really exciting. I mean, like you guys seem to have done your research and on Olympus Pro and Wonderland. I mean, in terms of Wonderland, it's, I guess, is a different kettle of fish. As long as you don't have seafood in your team, that's I think you're good.
Yeah. And we're already implementing some steps there to create transparency on the early contributor team, but then also we would build into the treasury the smart contract functionality. So whenever the token holders vote on a particular governance proposal, it will activate the smart contract. There's not going to be, interference by any human. Let's say it's going to be auto-applied smart contract based off of the voting result.
Yeah, it's really interesting. I mean, there's some protocols, for example, some of the option products, some of the wall strategies that are there in DeFi at the moment. They're sometimes managed by actually a person or managers. So it's not as decentralized as they advertise to be. So I think it's very important that as much as possible it's managed by smart contracts, and then obviously you'll have all the the audits and the security procedures that you'll have to do to kind of make it as secure as possible. I mean, DeFi, is not 100% secure, but it's important that it's not managed by a person.
Exactly. And so you would always have a certain, like we're looking at obviously the multi-signature wallet, multi-sig options for specific functions. And this multi-sig wallet will have a minimum amount of signatures, and we're looking probably at at more than 3 or 4. It's probably actually going to be more than that to add additional security. But then when the whole Karma finance ecosystem is developed, it will be moving away from that multi-sig manual activation of a vote to a smart contract activation of a vote. And then there's no more human, like in that sense, someone who has to go and accept something on a multi-sig wallet. We don't want to rely on people for that long. And also we want to make sure that the Karma Finance is open source, so people can then build on it as well. That's something we're very keen to do.
I guess that's an understandable progression. Majority of I guess DeFi products, especially kind of complex DeFi products such as yours, kind of has a V1 where it's kind of progresses, and then V2 is more decentralized as V1. So that's an important step. Sorry, Stephen, I couldn't ask you. I'm sure you must be having a few questions in the audience. If you guys have any questions, shoot away to Hyperconnect. We'll be happy to answer them. And yeah, thanks a lot for the alpha as well. I'm really, really looking forward to Hyperconnect. But what are the timelines? Is there like a timeline in terms of for the other products beyond Karma Bond services?
Yeah, so we're thinking about that right now. Like we're now fully focused on develop in the whole sort of app side of things and developing all the smart contract functionality for Karma Bond, and we're sticking to our CPS timeline. And we want to make sure we deliver on time as per the voting of key reps. They give us their confidence, their vote of confidence, and we want to make sure we can show them that we can deliver this product in the 4 months that we said we would. So all hands on deck at the moment to complete this piece of the puzzle. Then there's a sort of a question on, okay, Karma Bond is launched and it's successful, let's say, and it's working well. How do we then focus our attention on the next element? So Karma Invest and Karma Save. So we think that we would most likely want to start growing our team a bit more in terms of our how we support this product moving forward and building it. We may even apply for further CPS funding to develop the Karma Save and Karma Invest elements as well. So that those are some considerations. So I can't give you a time frame for that, but I think Karma Bond is really the foundation. That's where all of these bonding mechanisms really lie. And so if we succeed in Karma Bond, it will set us a very strong foundation. We're also the team that's developing Convexus AMM as well. So the Convexus protocol will have some synergies built in with Karma as well. So that'll be quite interesting to see. So we've got quite a few things working on at the moment and developing. So I can't give you any timeframes for Karma Invest and Karma Save, but certainly Karma Bond, if you go to our CPS proposal, you'll see the deadline there, and that's what we're focusing on right now.
Fantastic. Stephen, did you have any questions that
Yes, I actually do. Yeah, I didn't want to interrupt the flow because there was so much alpha being dropped that I wanted to stay quiet. But I have some questions more regarding the minting of the bkarma and the karma on how everything will work and evolve. So we already learned from what you were saying that bkarma will be issued based on the amount of fees that the selling of the bonds generate. But then in the first early on, you will have minting of bkarma, and it will not be able. You will not be directly able to swap it to karma. So that this will happen on a later stage. So then I assume in the second phase, you will be able to swap bkarma to karma. But in the meantime, there are still bonds running and there will still be bkarma minting. Is that correct?
Yeah, that's correct. So it's going to be a staged approach. So stage 1 is launching of Karma Bond. Stage 2 is once we reach the total amount of fees we want to get to as a launch, we will stop issuing bkarma.
Yeah.
And then the next stage is activating bkarma conversion factory, we're calling it, the conversion factory, which will allow you to convert bkarma to karma. And we
Okay,
will
that will only
activate.
happen after bkarma minting has stopped.
That's correct. Yes, because
Okay,
otherwise
all
people
right.
will be able to game the system. You know, they can
Yeah,
they'll try
yeah.
and game it. So we want a staged approach. So and then after the minting, so the conversion factory is live, people mint to Karma, and then Karma will be activated for DEX trading very shortly
Okay.
after. So we want to make sure that people can trade it.
Yeah. So then there is no more minting of bkarma, and then you can swap it to karma, and then you will be able to stake it, and later on use it in the safe product, for example. But once that karma, not the bkarma, but the karma has been is available, and you are still selling bonds, how does this happen then? There is no more. Is there then additional karma minted from selling bonds, or does that no longer happen?
Yeah, so this is a good question. So you will have the Karma Bond service still running, and it will work just like it's designed to, just without bkarma.
Yeah.
But then we will also have a Karma minting factory where people will be able to swap a particular asset for Karma. So most of the Karma inflation will be directed to the Karma mint factory. And that's where people can deposit USD in exchange for Karma at a discount, at a market discount, ICX in exchange for a Karma at a market discount, any other, sort of Karma bonds, if you will be activated, but
Okay.
not within the Karma Bond protocol. The Karma Bond is only for really protocol-owned liquidity. But then we will have our own minting function.
Okay, so you will no longer at that point when karma is in use, you will no longer get any karma when buying a bond. So you that benefit is no longer there. That's only for the early users of the bond of the karma bond.
Yes.
But they will still, of course, get the discounted governance tokens, but they will not get any more the karma token on top additionally. Okay, that's only for the
Correct.
early users. All right.
Only for early
That's
users.
And then once you have moved to only minting karma, then by, for example, like I think it's a way of diversify the treasury. But how does that work? Is it also voted by the karma holders how many karma may be minted and for which assets? Or how does this work?
So what we will design is the minting will be designed so that it's beneficial for the user who wants to mint and deposit assets in the treasury, but the minting will be controlled. So if, for example, the Karma treasury suddenly gets close to 1-for-1 backing, we will have to pause the mints. You have to pause it, and no more users can mint Karma until the treasury value goes back up, and then minting will continue. So that's one. There's like control mechanisms in place to always ensure the backing 1-for-1. So Karma will have, in order to create this minting function, Karma will have an inflation, and the majority of the inflation will go towards this minting to offer Karma at a discount. And then after a certain amount of treasury value, we may decide, as in when I say we, I mean the DAO, by voting, may decide, okay, let's stop minting now. There's enough Karma in circulation. We will allocate the inflation no longer to the minting, but to the staking, for example. So there will be, the inflation rate will be stable, as long as all the parameters are met for one-to-one backing. And then the direction of the inflation will move away from the minting and then towards the staking. And then again, that's also a DAO vote on the inflation percentage. We want to keep the inflation quite low, actually very low. Something similar to Icon, like 4, 5, 6% per annum, something like that. But we may create more inflation in the early months to encourage minting, and then slowly decrease the inflation towards the end of the year, so that we meet a particular annual inflation target of 4%, 5%, 10% maybe.
Okay, so the stakers of the Karma token, they will be receiving Karma as well.
Yes.
So on top also the returns from the Treasury Investment Fund.
Exactly. So
part of it.
Yeah, exactly. Part of it. So I'm working on this pretty crazy diagram showing how everything is connected. But essentially, yeah, so Karma stakers will have triple benefits. They will have a share of the inflation. It'll be low in the beginning, but high towards the end, because most of it goes to the minting. So they have inflation allocation, the APY of the investment strategy, and they will also, if they lock up their Karma with the V-curve model, they will also get boosted APY. So if they lock up for 4 years, they get the 2.5x boost. So yeah, those are the initial benefits for stakers.
All right, nice. It might be a bit confusing for users. For balance, for example, they know the B balance is what's actually the same as the V token that you are saying. It's the boosted balance will be then a V for Karma. The V Karma, I guess it will be something like that.
Yeah, maybe. We don't know what the name will be. We'll try and make names as simple as possible, but of course it's like, it's always the same. Like the words exist for a reason because it is very complicated, but I don't know what word we'll go for. If we go for vote escrow, so VE Karma or V Karma or S Karma, I don't know.
There might be a bit confusion within the community for the bkarma that it's a whitelist token and it's not a boosted token, but we will try to inform them as good as we can.
But and that actually could be a vote, you know, because the lockup mechanism won't be live at launch, so it could be like a vote that we say, hey, how would you like this locked token to be called? So yeah.
But everyone loves crypto in general loves the curve model of user rewards. So yeah, I mean, I'll actually send you because Ribbon Finance. Sorry, not to go off topic too much, but Ribbon Finance gave the governance vote is going on right now. So they're using the curve model, but there's a lot of different ways they're looking at, which is quite unique. I'll send it over to you.
Okay. Yeah. Thanks.
But, yeah, I mean,
from my end, one more question regarding the Karma token. So we now learn how the B token will be minted, how then afterwards the normal Karma token will be minted. Both, and then also from staking, you can also get additional Karma. Is there any minting of Karma happening on the other products, on the bond or the safe side? You already said on the safe side that it can be burned to used as a Karma dollar, but is there any minting involved in the other products?
Not in the other products. So the Karma bond is really designed for protocols, other protocols. The minting is designed to grow the Karma treasury and in exchange for dollars or ICX or whatever you want. Karma Save will burn Karma, but there will be no other minting apart from the inflation.
Okay.
So
all right.
The inflation will most likely be slightly higher in the beginning and taper off towards the end, but always respecting a relatively low annual inflation. So those are that's the only way karma is created, is through the minting and the inflation. So 2 avenues of creation.
All right, that's clear. Thanks.
Yeah, I think that's it. That's it from us in terms of questions, and we learned quite a bit. Thanks a lot, Hyperconnect, for your time, and really looking forward, to Karma Finance and Karma Bond launching. If you guys have any more questions, any questions for Hyperconnect, shoot away and just raise your hand. I'll get you in if there is any. Otherwise, thanks a lot for your
For the
time.
people in the audience, if they do not know, there is you can raise your hand below if you have any question to ask, and you will be invited to the stage. What's your question? And then maybe to give you some time to do that or to think about a question, maybe I just wanted to highlight that for the audience and also for the people listening to the recording later, that why it's important and for who it's important to learn how Karma DAO works. One, as there are two perspectives. You have one, the individual user, who will be able to get the benefits from the discounted government tokens, all the benefits that Karma has, and also we just learned the alpha drop today, the burn later on in the save function, which will work like we know from Anchor protocol. And then secondly, also if you are a BALN holder or a FIN holder or an OHM holder, at a certain point you will probably be asked to vote upon a proposal for protocol-owned liquidity for issuing bonds from those tokens on Karma Finance. So that's already good for you to learn to have this knowledge before you go to vote. Just wanted to highlight that as well. I do not see any more questions from the audience, so I think we can close the episode here then.
Yeah, thanks a lot for your time, Hyperconnect, and thanks as always, Stephen. Yeah, thanks. And next week, hopefully, we'll be talking a bit more on some of the plans that Home Finance has in terms of the boosted Home rewards potentially that talk is going on. So we'll take up few of these topics and the roadmap they have for January and February as well. So lots of interesting things going on for Home Finance, and we hope you guys join us next week. Thanks again, Hyperconnect.
Thank you.
Thank you so much, guys, Arash and Stephen, for hosting. Really appreciate it.
Thank you for your time. It was very informative.
Thanks. All right. Have a good weekend, everyone.
You too. Bye-bye.
You too. Okay. Bye-bye.